Do you want to learn more on how to put money to work in regenerative food and agriculture? Follow our video course via investinginregenerativeagriculture.com/course or in the links below. Now, on to the podcast. Welcome to another episode of Investing in Regenerative Agriculture, Investing as if the planet mattered, a podcast show where I talk to the pioneers in the regenerative food and agriculture space to learn more on how to put our money to work to regenerate soil, people, local communities and ecosystems while making an appropriate and fair return. Why my focus on soil and regeneration? Because so many of the pressing issues we face today have their roots in how we treat our land, grow our food and what we eat. And it's time that we as investors, big and small, and consumers start paying much more attention to the dirt/soil underneath our feet. In March last year, we launched our Patreon community to make it easy for fans to support our work, and so many of you have joined as a member. We've launched different types of benefits, exclusive content, Q&A webinars with former guests, Ask Me Anything sessions, plus so much more to come in the future. For more information on the different tiers, benefits, and how to become a member, check patreon.com/regenerativeagriculture or find the link below. Thank you. So welcome to this podcast, Regenerative Agriculture, Investing in Agriculture as if the planet mattered. I started doing these podcasts because I noticed that I was having quite some, at least for me, interesting conversations around investing in regenerative agriculture. And every time after the conversation was finished, I thought, why didn't I record this so I could actually share it with others who are interested in this space? I'm Koen van Seijen. I'm a senior manager at Tonic, where we work with a community of impact investors. And in my spare time, I record these interviews. So why regenerative agriculture? Because so many of the current issues we face as a world come together in this sector. And impact investing for me offers a way to scale this sector and reach the potential it has. In these interviews, I'm talking to people who are trying to scale up the regenerative agriculture side, either by increasing the inflow of capital into the sector or by increasing the impact on the ground and scaling up the enterprises on the ground. You're going to listen to an interview with McMahon, co-founder of SLM Partners. We discussed a lot of things in this interview, among them their current projects in Australia, who are benefiting from a good year of rain, and their new projects in Ireland and Chile. We also spent some time with the white paper he wrote about ecological farming and the investment case, looking at the main risks for the current farming industry and the main opportunities and barriers that are slowly being taken away, luckily. Enjoy. I'm here today with Paul McMahon, co-founder and managing partner of SLM Partners, an asset manager that acquires and manages rural land on behalf of institutional investors to scale up regenerative ecological farming and forestry systems that deliver financial returns and environmental benefits. He's also the writer of a white paper called The Investment Case for Ecological Farming. Very warm welcome, Paul. Thank you for joining us.
Thank you.
So I would like to start with why are you in this business and how did you end up here?
I think we see land at the center of a number of overlapping and increasingly important environmental issues. For example, climate change. Land is going to play a huge role as a carbon sink as you try and get greenhouse gas emissions out of the atmosphere, and whether that's in soil, whether it's in trees or biomass on the land. But terrestrial carbon, we think, has got a huge future of the next 50 to 100 years. But looking more broadly, looking at water quality, the water we drink coming out of our taps is hugely influenced by what flows into it from agricultural and forest landscapes upstream, and issues like nitrate pollution, pesticides, runoff, sedimentation, all play a big role in that. Biodiversity, of course, is another huge issue. In agriculture and deforestation responsible for some of the biggest biodiversity losses. So we have all these overlapping environmental sort of pressures, which are just intensifying, as time goes by. We decided to get into it from an investment point of view because although there are these sort of threats, we also see some huge opportunities where we found that there are more ecological farming systems out there which are able to address those environmental issues, able to put carbon in the soil, able to improve water quality, increase biodiversity, improve soil health, while also generating really good yields at a low cost in a very profitable way. And we think those systems are proven at a small scale, and there's some fantastic case studies out there. And I'll note, often driven just by innovative farmers, not necessarily coming out of academia or the research institutes, but by really innovative farmers trying out new ideas and sort of creating things from the ground up. And so they're proven at a small scale, but they need to be scaled up. And that's where we think investment capital can play a role. You help kind of turbocharge that transition from, let's say, more extractive, conventional industrial agricultural systems to more ecological, sustainable, resilient agricultural systems.
And when you look at the current situation, because often investors are asking the question, why now, and what has changed in a sector to make it extremely interesting to enter at the moment? What makes the sector at the moment, except for all the huge issues you mentioned before, so interesting to start? Is it that the pioneers are ready? Is it that the systems are tried and now is the moment to scale them up, or is there something else as well?
Yeah, I think there's two things changing at the moment. I think, the first, going back to those environmental issues I talked about, what we're seeing is that those, let's say, what were previously externalities, which people got away with for free, are increasingly being priced and regulated, and so actually farmers, land managers are being forced by policy and regulation to actually take into account the impacts they're having on carbon, on water, on soils, and biodiversity, and that's leading to restrictive regulations in some places where you just can't do what you could do before. Take antibiotic use in intensive livestock production. That was absolutely widespread prophylactic use of low-dose antibiotics, completely mainstream in a lot of feedlot in the US, for example, and that's going to change, because everyone has seen it's leading to antibiotic-resistant diseases, massive human health implications, and the regulations are tightening, and practice will have to change, and people will have to take a lot of antibiotics out of use. So we're seeing those regulations tighten up. On the flip side, on the environmental side, we're also seeing some, let's say, positive signals coming along, some potential rewards for doing things the right way. So, for example, carbon markets, it's been probably more talk than action so far when it comes to land in particular. But we are seeing the emergence of some of these markets. So, for example, in Australia, where we work, the government's emissions reduction fund is putting 2.5 billion Australian dollars to work, paying mostly farmers to store carbon in trees, below soil, on rural landscapes, and that's starting to generate some really interesting economic incentives, to change practices. So I think that's the first part around those environmental externalities are getting priced, getting regulated. Farmers have to take into account more now than in the past. I think a second, and maybe even a more powerful driver, a more immediate driver, is shifting consumer demands and consumer trends. In that the modern consumer, particularly young millennial consumer, is very aware of all these environmental issues, very concerned about where their food comes from, super motivated by issues of sustainability, but also of health, nutrition, flavor, and that's creating massive demand in markets like organic foods, grass-fed beef, grass-fed dairy products, and they're the fastest growing sectors in food at the moment. And so actually, a lot of the traditional food companies are seeing that and are scrambling to respond. So consumers driving things very, very quickly, and then on the other side you have the environmental regulation and markets kicking in as well. So yeah, we think the shift is just beginning and has a long way to go.
And when you look at what drove you personally into the sector, was there a specific moment, or was it something that grew over time? How you ended up on the regenerative or ecological farming side?
I first came to this while working at a company called Climate Change Capital in London as an investment manager, which had at that time the world's largest carbon fund. And we were sort of given the task of looking at land through a climate change lens. And when you do that, you actually come to some quite interesting conclusions, because you're looking at it in terms of, mitigation, so how you put carbon back into landscapes, but B, adaptation, resilience. How do you make land more resilient to a changing climate? Well, there's going to be more extremes of drought and flooding and heat waves and storms. And if you look at it through that lens, you realize that what we need to do is build healthier soil, put soil organic matter back in the soil, have more resilient ecosystems and landscapes, more diverse landscapes as well, and you end up gravitating towards these more ecological, farming systems. So it was sort of a process of discovery, which I began probably about 8-9 years ago now, where we developed some of these initial ideas. And I think the good thing is the more we've worked in this sector, and we've been working this now since about 2008, the more I think we find that those ideas being validated. That we're seeing more and more case studies of farmers proving these systems can work, economically and environmentally all around the world. And those consumer trends are intensifying, as are those efforts to regulate the environmental impacts as well. So yeah, it began 8 years ago, but the nice thing is that we just think it's a train that's sort of gathering momentum, year by year.
Yeah, I completely agree, obviously. And to come back to one of your points, you mentioned resilience in the farmland. And I can imagine from an investor point of view, and you mentioned that in the white paper as well, it's very interesting to be invested in farms or farmland operations that are more resilient, especially in a time where climate change starts to kick in. Can you explain a bit more about how that changes a business model of a farm and how that's different from the traditional / chemical way of farming?
Yeah. Well, farming is the ultimate biological business. It's the fundamental business of farming is taking sunlight, energy, combining with water and the properties and minerals of the soils, to grow things. It's a biological system. So you're always going to be exposed to some extent to fluctuations in weather and climate. And that's always been the case, always will be the case. But yeah, we do see that those extremes are getting more dangerous as time goes by. And the more conventional systems can be very stressed by that. So there's quite a few examples of that. For example, organic cropping systems, which are able to outproduce in terms of yield actually conventional cropping systems. During droughts, there's been a number of case studies in 2012 in the US where that was the case with corn production. We've also seen it when it comes to pasture-based systems, grass-based systems, where the landscapes would have healthier soils, healthier grasses, using forms of rotational grazing or multi-paddock grazing, are able to ride out those droughts and floods an awful lot better. So yeah, I think it's an interesting scene because economically, from a financial point of view, if you can take out some of those fluctuations in yield and production when those weather extremes hit, but also kind of take off some of the reliance maybe on input costs as well. You can just smooth out the return, and the profitability and income from the land.
Yeah, I remember one example. I think where in the drought, one ecological farm was still producing about 80% of their normal yield, but their neighbors were probably hardly harvesting anything, which would for them, of course, mean a completely lost year. But for the ecological farm, they were still having, although 20% less than normal, but still actually a proper yield to sell, probably at far higher prices because of the drought.
Exactly, yeah. There's quite a few examples. There was also a great example, I think, from Central America when, after one of the big hurricanes hit, where they examined a whole range of farms, on the hillsides, and found that those using more ecological practices with a better soil health, they're the ones that survived. They were able, whereas the ones that were more chemical-based, more conventional, huge problems with erosion, a lot of crops completely wiped out. So I think that there's growing body of evidence around that theme. There's also diversity. I think you find that those more ecological farms tend to be growing a broader mix of crops or raising a broader mix of animals. So you're getting some resilience just from diversity, which really reflects and mimics nature. Nature likes diversity. Nature abhors a monoculture. And that gives you resilience environmentally, but also in terms of markets as well, where you're going to have good years and bad years for different products.
So nature gets bored when there's a monoculture and starts annoying it with pests, etc.
Fights back, rather effectively.
Yeah, and in the long run, you don't win that. And if you look, so if we make it a bit more concrete, you co-founded SLM Partners to dive into this trend and to see the opportunities. When was that?
Yeah, so we founded SLM Partners in 2009, and our vision is building a asset management firm wholly focused on sustainable regenerative agriculture and forestry. So we take a real assets approach. So we're in most cases looking to acquire land or invest in land as a primary asset, and then look to really accelerate a shift in management, from let's say more conventional unsustainable practices to more sustainable regenerative practices. What we've done so far, we've raised an Australian beef capital fund in 2012. We have about 100 million Australian dollars in equity and debt in that structure in Australia. We've acquired over 1 million acres of land in Australia for grass-fed beef cattle production, using a form of rotational grazing called adaptive multi-paddock grazing or holistic grazing, to take somewhat degraded land and to regenerate it, and bring back the health of the soils and the grasses, but just by managing cattle in a slightly different way. We're also working some new ideas where we're raising an Irish forestry fund. At the moment, we've got backing from the European Investment Bank for that. And the idea there is we're looking to acquire existing mid-rotation commercial forests in Ireland, all of which are destined to clear fell, which can be destructive in terms of the impacts on soils and water and biodiversity and even carbon storage. And we want to transform, where possible, to a more sustainable type of forest management called continuous cover forestry, where you never clear the forest, you maintain forest cover, you selectively harvest, you get a more natural, diverse forest. We're also working on some investment strategies in Chile and Patagonia, looking at sheep production and looking at a couple of ideas in North America as well. So global focus, but everything comes back to a more ecological, let's say, farming or forestry system, which is proven at a smaller scale, and looking to scale that up, through ownership of control of land, and then also partnering with really great farmers and foresters. I mean, that's the other key thing. There's lots of people running around, former bankers with presentations and spreadsheets, and that's kind of easy to do. But the hard part is actually making it happen on the ground, and for that you need great technical people, great operational managers, people who've got dirt on the fingernails and really have done this before. And so we always try and partner with those people, locally, wherever we're operating.
And when you look at the last few months, and what kept you up at night? What have you been working on? And of course, what you are allowed and possible to share. But what kept you up, and what are you proud of that worked in the last few months?
Well, I think in terms of progress we've made the last few months, I think we've done some quite interesting carbon deals in Australia, which we're quite proud of. So we're participating in that Australian Emissions Reduction Fund I mentioned to you before, where we've actually won contracts to supply quite a large amount of carbon credits from the land that we own in Australia, mostly through regeneration of native woodlands and a savanna type woodland ecosystem, which is very consistent with the kind of grazing approach that we're using down there. So that's been exciting to see that market develop and to be able to participate in that. I think the other thing is quite exciting. We've on the verge of launching our Irish Forestry Fund, which would be a bit of a new departure for us into timber. But I'm originally from Ireland, so it's kind of close to my heart. And I think we have the chance to really catalyze a bit of a change in how forests are managed. Not just in Ireland, but potentially across Northwest Europe, where there's a kind of reliance in clear felling, and we think there might be a slightly better way to do it. So that's been two of the more exciting things to be involved with over the last year or so. An ongoing challenge, a lot of work we have put into is raising capital and educating investors and finding investors who are willing to back the kind of strategies that we're developing. I think it's an overall lack of understanding of agriculture, actually, just full stop. It's quite new as an asset class for many investors. It has not tended to attract much institutional capital, actually, until quite recently. So a huge amount of education has to be done just to get people comfortable with the dynamic of the sector. And then beyond that, if you're doing something a little bit more ecological, something which is maybe not quite the mainstream, there's an extra level then of education to show people evidence, get people comfortable that this can be scaled up.
Yeah, I think that's an excellent point you make, because I think in the white paper you mentioned since 2009 that the boom in agriculture investment really started, but of course it was all traditional agriculture, and the time of easy money, or the days of easy money, are over. So it's almost educating investors in how agriculture actually should be done, but they either don't know it, or they're used to something else, or to get different presentations with slightly different time horizons, etc. So how do you find Because what's the big difference in the presentations you're giving and other fund managers in the agriculture space are giving, and what's the response to that?
Sure. Yeah. Well, I think there's a small number of groups like ours, who are trying to attract investment in these, say, more ecological, regenerative agriculture systems. We in our white paper we identify, I think, 6 or 7 different groups. Probably in total we manage about $500 million in assets. So it's not insignificant. At the same time, if you look at the total money that's been raised for agriculture investment over the last sort of 10 years, it's probably more than 20 billion. So it's still a small percent of that. And I think most of the money has been flowing into conventional, more industrial farming systems. It kind of appeals in a way to a financial mindset where everything gets reduced to a pretty linear process where you acquire an asset, you work out what it costs in terms of inputs to put things in and what you might get to take things out the other end. And the more simplified it can seem, and the more industrial it can seem, and the more it can look like a factory, for example, the easier it is in some ways to convince people that this is the way to go. So I think there's a small number of us who are trying to show that there's quite a ferocious debate going on within farming around the future of agriculture, and that there are some really, really interesting and compelling strategies that have a more ecological leaning. I think, though, that space is opening up more and more now, actually, and that will be the third factor I mentioned about the environmental regulation and consumer trends. But actually, the third thing that's happening in the investment side is, if you look at where money flowed in agriculture over the last 5 to 10 years, it mostly went into quite passive buy and lease strategies, especially focused on in North America, where people, particularly land banking, acquiring land, leasing it out, not really caring too much what happened on the land, and just riding up a secular upswing in land prices. And there was some pretty aggressive land appreciation, especially in the US and many parts of the world over the last decade, and that produced good returns. But that's started to run out of steam now because land prices are actually coming down, they're correcting, cash rents are coming down. If you look at conventional corn, soybean, wheat prices, they're low. Farmers actually losing money most of them this year in the US. So it's a pretty tough time actually in conventional agriculture to make any money. And at the same time, you look what's happening in the organic space in these more, let's say, consumer-friendly markets. That's where all the growth is. That's where premiums are available. That's where people are still making good money. So I think investors are waking up to that. They're seeing that those more passive conventional strategies are maybe running out of puff a little bit, and they're looking for slightly higher value add, more active, more niche strategies, where they can get behind a team and propel some changes in how the land is managed and capture more returns from that.
Yeah, it seems like the perfect storm for the traditional agriculture system has arrived. And if you look at what do you see as the biggest risk or the biggest hidden, overlooked risk of the traditional agriculture side? You mentioned a number of them in the white paper. What for you is the number one overlooked risk there?
Well, I think it depends on your time frame. I think if you look over a very long time frame, I think the degradation of natural assets, in particular soil degradation, I think it's a huge issue for kind of humankind over the next century. It's one of these slow run problems that you can ignore, especially if you're in a very fertile area with very deep topsoils. But eventually it will come back to bite you. For example, Iowa is a great example, some of the most fertile, wonderful soils in the world. But Iowa's lost half of its topsoil, over the last 150 years through erosion. Now it's still got, many feet left because it's incredibly deep, but that just keeps going on. Eventually you will hit bedrock, and you will see declining yields and problems cropping up. So I think that soil degradation is one of these things which doesn't get a huge amount of attention, but it's a big issue. And then if you go to more, let's say, more brittle parts of the world, which didn't start out with such abundant resources and natural resources and soil resources, you are seeing it, really kicking in, where erosion, loss of nutrients, loss of soil structure is leading to collapse of systems, and climate change is then aggravating that to a large extent. So I think that's the sort of the long-term thing. I think though in the immediate term, the bigger risk of the more conventional systems is the changing consumer. The consumer, whether you agree or disagree, wants something different from what conventional ag is selling. The consumer wants something green, healthy, flavor, some with a story behind it, and that's good for the environment. And I think that the more conventional systems have a real struggle on their hands trying to overcome that. So I think that's what's going to propel actually the immediate shifts back along the supply chain, via the food companies, via the restaurants, via the Chipotles and Whole Foods and of the world, who are recognizing that and trying to follow it.
And when you look at the sector, the regenerative agriculture sector, as it's scaling, what are the two most important barriers you see for this sector to reach its potential?
Yeah, so I think the question we always get, and I think lots of people get working in this space, is where's the track record? Like, where's the proof? And a lot of these systems have been proven, sometimes at a small and medium scale, usually by individual farmers. But there can be a bit of a leap to go from that to actually an investment product, a fund or a company, doing it at a larger scale. So I think that's probably the biggest challenge still. Just be able to show evidence and data that this can be done at a scale. Now I think there's enough proof of that.
Nature has done it for a few billion years, but
yeah, I think there's enough proof at that medium scale. So economic proof as well of really great, medium to large scale producers doing it on their own farms. So I think that is there, and then I think it is possible to go from there to a slightly larger version of that, a more institutional investment version of that. And I think as time goes by, we will fill in more of the gaps, and we'll have more successful funds out there with track records, and then it becomes much easier. I think that's probably still the biggest obstacle is that question of track record and improve. I think the second is just a more general one for the sector, in that just agriculture of any type is still unfamiliar territory for most investors, and there's just a huge amount of education required to get people used to the dynamics of the sector. It tends to be capital intensive. The returns are lower. You're not going to get your VC private equity 20-25% net IRRs. It's just not possible. But at the same time, you have a lot of downside protection because you have real assets, you have land, you have biological assets, so which are also appreciating assets usually over time rather than depreciating. So I think just getting people to understand the dynamics of the sector is the other obstacle. And some have got there and are allocating and investing heavily, but a lot are still working their way through the education process.
They're still in the return vision of Silicon Valley, and still the illusion of the 20-25% that's possible outside software.
Yeah, exactly. Yeah.
And when you look at the barrier of scaling the few pioneers or the pioneers with a few hundred or few thousand hectares to a fund like SLM, like you're managing now, how did you overcome that barrier to investors? And because I know the fundraising hasn't been easy, is there any key lesson, any key takeaway on how to overcome that and be one of the first to raise such a fund?
Yeah, well, I think the first thing is building a great team. So actually building a team with real farmers who've actually done it before, and who can point in a way to their own personal track record. And it may not be a traditional financial track record of IRRs and multiples and the like, but it's an operational track record. And so I think having those people on the team is critical. I think the second then is being able then to identify and research and kind of catalog in a way the case studies that do exist, in that particular region, and be able to present them to investors and take investors to those farms and show them. That's what we did. We took investors to farms in Australia using exactly the same ideas, having done it with great success, and so they could sort of see with their own eyes, this has been done on, let's say, 10,000, 20,000 acres. Well, there's no reason it can't be done on 100,000 or 500,000 acres. So I think having those real life case studies is very important.
And if you look at your coming months / let's say 6 months, what are you working on mainly, and what's your main goals? What are your main goals for the next half a year?
So we'll be continuing your operations in Australia and looking to take advantage of what's been a really good year in terms of rainfall and growth down there. So very much focused on operations in Australia, and then raising capital for our new projects in Ireland in forestry and also in Chile in livestock. And then we're starting to think about some ideas in North America as well, where I think it is possible to do things at even probably an even greater scale, given the dynamics that are there. So we're putting a lot of effort quietly into developing some strategies for the US.
And for Ireland, do you see, because you've been for 6-7 years talking about livestock to investors and to your network, and now you're talking about trees and forests, is that difficult for them to get their heads around, or are you already into the door because you have you've built up this track record in agriculture in general?
So a couple of things. I think we always said at the beginning that we want to look at agriculture and forestry. If you look at our kind of philosophy is around rural land, and harnessing sunlight, water, and soils, to grow things. And it's interesting. So financial investors like to think in asset classes, but nature doesn't think that way. The boundaries are fluid and everything's interlinked. And so we can see a time in the future where we may even try and combine some agriculture and forestry strategies together. So they've always been kept apart, but actually we see some really interesting potential for agroforestry systems, in some parts of the world. So I think our new steps into forestry is always something we had in mind. And I think in the future, we can see some very complementarity between the agriculture side and the forestry side. I think the second thing is we've also been building up a team of people who have this real forestry experience. So we have a guy who's joining a team in London who's spent his whole life in forestry, who helped run a $250 million forestry fund in Asia. And we're working with a great team of forest managers in Ireland too. So again, without that team, there'd be no point in even trying, but because we have the right people in place, then it is credible.
And for the teams on the ground, is it difficult or challenging maybe to see a future where those two worlds collide, or it's very natural to imagine livestock and forestry in the same system at some point?
It depends where you go. I think it's interesting. I think in educational terms, where people go to college and learn about agroforestry, they're often kept quite separate. And actually, one of the sort of unfortunate implications of policy has also been to keep the two very apart as well, especially in Europe, where you have a common agriculture policy, which is all about farming, and then you have forest policies, which are all about forestry, and never the twain shall meet. And God forbid you fall in between, because then you might lose out on your subsidies on both sides, and that wouldn't be good. So I think there's also some unintended consequences from the policy side, where keeping those worlds apart. Now, having said that, there are some fantastic innovators out there doing agroforestry and silvopastoral systems very successfully, at a decent scale. Examples in the US, examples in Spain, examples in other parts of the world. So we think that's a really exciting area, actually, agroforestry, and that there is enough of those conditions in place in terms of case studies, technical experts, that it will be possibility there in the future.
Extremely interesting. So I would like to conclude with a last question. If you could give advice to smart investors that want to get into the regenerative agriculture space, what would be your number one advice?
I think, only invest with teams who have real farmers on board. It's too easy to come up and sell a concept, but the farming is actually really hard, and it's actually hard than managing a fund, for example. And so unless you've got people, on a team who've actually done this and have made mistakes and have the scars to show it, then I'd be a little bit wary. So I think, having that sort of technical operational element is so important in the world of agriculture.
Are there moments in the last 6-7 years that you, because you don't have farming experience, right?
No, but thankfully I partner with people who do.
And have you had any experiences where the lack of farming experience of you was awkward or painful, or?
Not really, because I know when to defer to my the experts on our teams. So I think it's important that people bring a diverse range of skills to a team, and those with technical knowledge, are given the space to make those decisions and drive strategy when appropriate. At the same time, it is also important to have people with investment financial experience as well, who know what investors want, who can structure things, who can report back, who can make it work as an investment. So there's a certain amount of translation has to go on between the world of farming and the world of finance, which speaks very different languages.
Yeah, that's actually exactly the type of people I would like to interview in these podcasts, who are with one leg in the farming world and with the other leg in the finance world to scale the regenerative agriculture space. So thank you, Paul, so much for your time and your knowledge today, and I speak to you soon.
Great, thank you very much.
You just listened to an interview with Paul McMahon, co-founder of SLM Partners, who is scaling up the regenerative agriculture sector in Australia, Ireland, and Chile. I hope you will join us again soon with many more interviews with people in the finance sector and practitioners on the ground, all working to scale up the regenerative agriculture industry.
If you found the Investing in Regenerative Agriculture and Food podcast valuable, there are a few simple ways you can use to support it. Number 1, rate and review the podcast on your podcast app. That's the best way for other listeners to find the podcast, and it only takes a few seconds. Number 2, share this podcast on social media or email it to your friends and colleagues. Number 3, if this podcast has been of value to you, and if you have the means, please join my Patreon community to help grow this platform and allow me to take it further. You can find all the details on patreon.com/regenerative agriculture or in the description below. Thank you so much, and see you at the next podcast. Dear friends of the podcast, I'm super excited to share with you the online video course Investing in Regenerative Agriculture and Food. How to put money to work in regenerating soils at scale and growing a lot of tasty food while doing it. Why are we doing this course? After 100 interviews and more than 100 hours of audio asking the question how to put money to work in regenerating soils, and have been following the space since 2011 and recording these podcasts since 2016, we thought it was time to share our lessons learned. What have we seen in the space over the last years? How have we built our decision-making framework? What to focus on with the podcast? How have we picked interviewees? And what questions should you ask? What is happening in the space? What should you read? What should you listen? What should you watch? How to approach this space? For whom is this course? You, the soil builders and investors in this space. The soil builders, people working in this space, entrepreneurial farmers, fund managers, vehicle builders, crowd investing, platform builders, agtech companies, farm-to-gut food companies, permaculture, keyline designers, holistic management consultants, etc., etc. People that are building soil at scale. And the investors who are putting their own money to work through their family office or as private individuals, or people who are putting other people's money to work through foundations, institutional capital, banks, insurance companies, etc. Is this course free? No. This is pay what you think it's worth. Meaning, I have no way of knowing what this course will be worth to you. And I'm very aware that among the listeners of this podcast, we have people with very different means. So I'm inviting you, if this course is creating value to you, and if you have the means, to consider paying what you think it's worth. Thank you. So what is this course? It's currently a series of 17 videos, mostly ranging from 10 to 15 minutes, plus PDF slides, so you don't have to ride along. We're gonna look into why invest in regenerative agriculture and why extractive agriculture is so risky, how to invest, what kind of frameworks you could and I think should build, what to invest in, what kind of co-investors you could find, or what kind of investors you could find if you're a soil builder. Every lesson will have a digging deeper part where I will share what kind of reports, what kind of interviews, what kind of videos you can look into if you want to dig deeper. We're going to look at nutrient density, landscape design, and a lot more. So what is it not? It's not a list of investable deals. Unfortunately, that doesn't exist in this world. We're really at the beginning of the regenerative agriculture and food revolution. It's also not investment advice. Before making any investment, please find professional investment advice. So get ready, get a cup of coffee, a cup of tea, or whatever you're drinking. Click on the link below, sign up, and I'm really looking forward to your feedback.